Welcome to the Control and Compound February update. We're going to talk about real estate, business, stock market, taxes, economy, Bitcoin, you name it. Let's get the updates. Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing?
Hey, Darren. I'm doing great. Excited for another update in these crazy times. Lots of updates.
Yeah,
right?
lots of updates and lots of stuff going on in the world. Pretty interesting times, to say the least. So where do you want to start with the update?
Well, I just want to let everybody know that we are recording as of January 24th this month. So it's a little bit early. So like we said, it's crazy time. So if things have changed a little bit by the time this is released in a couple weeks, sorry about that in advance. But yeah, I'm going to be away next week at a conference where with a lot of other insurance underwriters, a lot of big people in the insurance industry to learn more, investing in myself, right? So I'm going to be there for a few days next week. And then we're going to have our EOS annual planning session for our rocks at the end of the week. So we didn't have time to do the update next week. So we're a little bit early. So just keeping that in mind when we're looking at this information, it could change, especially Bitcoin. I feel like that changes a lot. So there's a lot of things going on. So keep that in mind. For that.
We actually booked off 2 full days to do EOS annual planning, and we've got our guy that's helping us, Joe, coming from California to spend 2 full days with us. So we're excited.
Absolutely. Okay, so let's dig into some of these updates. So Bank of Canada, I typically update there. They haven't made their announcement yet this month. It's actually happening on January 29th. So the update kind of remains the same from December when they had that 50 basis point reduction on December 11th. So it is sitting at 3.25, prime at 5.45 right now. Like I said, though, January 29th, by the time this airs, that could change. And they're going to be looking at a few things that we do have stats on. So I wanted to cover the inflation side of things. There was an update on inflation where they had said that inflation moved from 1.9% down to 1.8% in December, year over year, December 2024. So it sounds really good, right? Sounds like we're doing good. Well, that was highly influenced by that temporary GST, HST tax break that we had. It actually affected 10% of what is listed in the CPI. So you're looking at, there was a decline in restaurant food, in alcohol, toys and hobby supplies, and children's clothing was down 10.6% with inflation. Well, yeah, that was a lot of what we might have bought over Christmas, but doesn't really show the true picture on what's going on with inflation, right? That was kind of driven just by that tax break. If we look at, the things that are actually impacting Canadians, we still have high inflation year over year. So you look at shelter inflation, 4.5% year over year, rent inflation, it was moderated slightly to 7.1 from 7.7 into December, but that's not huge. And mortgage interest costs actually grew 11.7%. So, the things that are really impacting Canadians are still feeling inflation. A couple other stats that I saw there were travel-related expenses. They saw an increase with travel services up 7.9% year over year. Gasoline costs were up 3.5% higher than this time last year. And this one I thought was kind of cool. In BC, accommodation prices soared 13.6% year over year, driven by a record monthly increase of 62%. When Taylor Swift came to town. So, inflation can be driven by many things, right? Many things, including Taylor. Now, the Bank of Canada's core inflation measures 2.5%, a little bit closer to realistic. So I think they're going to look at, on January 29th, they're going to look at a number of things. They're going to have to look at that core inflation number. They're going to have to look at the state of the economy, everything that's going on, the volatility. I think we might see, I think we're going to see another cut, but they're going to be a little bit smaller, maybe like 25 basis points is what experts are saying going into January, and easing on the cuts. But I still think Canadians need them, obviously, with those stats, right?
I agree. We definitely want to see more of those rate cuts. But Christina, we don't have a prime minister anymore. We've got pending tariffs and all kinds of things going on. So is the Canadian dollar at par yet with the U.S., or are we still?
Par, that's funny. Well, we bounced back to where we were back in the 1st of December, I guess. We're sitting at 70 cents right now, but this thing is, it's volatile times, right? Like you said, we don't have a prime minister at this point in time. We've got those U.S. tariffs that we could see take effect on February 1st. We've had declining oil prices, lots of things that are putting pressure on our loonie, right? Our loonie is taking a lot of heat right now. And so experts are anticipating that if the U.S. implements those tariffs, that we're going to see a drop in the Canadian dollar, right? Like there's no doubt there. Now, the extent of the impact is really going to depend on the scope of what happens. Like if we retaliate, like they say, lots of things could happen in the next few weeks, but it's going to impact the loonie for sure. Now, long term, I'm very hopeful that we get someone new in there that can speak and have some negotiations happening, and things will steady out. Do I think we're going to be on par anytime soon? I don't know about that, but here's hoping we can at least stick to that 70. I'll be hopeful for.
Yeah, retaliating. That would be like Mike Tyson hitting me, and I go, "Oh, I'm going to retaliate and fight back." Like, come on. All right. Economic news. Now, I thought this was interesting. We get all this uncertainty and stuff, but I read a cool report the other day about the Fraser Institute released a report where they rated each premier based upon their fiscal performance. So they looked at government spending, debt deficits, and taxes for fiscal year 23-24. So they listed premiers from 1 to 10. They gave them a score out of 100. And the number one ranked premier in the country for fiscal responsibility was Blaine Higgs out of New Brunswick. He was doing such a great job financially and fiscally for the province, the voters decided to vote him out of office. So he's no longer the premier, but when when they looked at the stats, that was his time. Number 2 was Manitoba's premier, Heather Stephenson. She also had a high ranking, ranked number 2, and she also got unelected by the voters. So we're seeing a trend here. Number 3, Danielle Smith, saying she's doing a pretty good job. Number 4 was Doug Ford. Number 5, Dennis King, PEI. Go Dennis King. Our premier, Tim Houston, was number 6. Scott Moe, number 7. Now we're getting to the bottom here. Francis Legault was number 8. David Eby in BC was number 9. And bringing up the number 10 position was Andrew Furey in Newfoundland. I thought it was kind of interesting, though, when if you read the full article or the full report, it gets into sort of how they ranked each one. In regards to government spending, the BC Premier ranked the highest, ahead of Stephenson and Ford. Meanwhile, 4 premiers failed to get a score above 50. That was King, Houston, Legault, and Danielle Smith. For taxes, no surprise, Danielle Smith led the way there. On debt and deficits, Premier Smith again ranked the highest. She scored 100, the only 100 I saw in the report here. But Premier Higgs was number 2, so pretty good. 3 premiers failed on the debt and deficits to reach a score of 50, and that was Stephenson, Furey, and Eby. So again, where does your premier rank? I thought that was kind of interesting. You can read the full report at the Fraser Institute.
Very interesting.
Okay, moving on to stock markets. In the U.S., S&P 500's up about 4% year to date. So month to date, year to date, all the same. We're in the first month of the year. And Canada's S&P TSX up about 2%. So again, all kinds of optimism we talked about in our predictions in the U.S. with, they expected less regulation, pro-business policies, lower taxes. All these things are expected we expect the U.S. to outperform Canada again this year in the stock market. Bitcoin, another month, just crazy times in Bitcoin, all kinds of stuff going on in Bitcoin. Up a little bit since last month, not a huge increase, just pretty, up a few percent. But we saw that huge rise at the end of the year, so not totally unexpected. The 1-year return on Bitcoin is still about 160% year over year, 1 year period. All eyes are still on the Trump presidency if they're going to do this Bitcoin reserve. But I thought it was interesting. I kind of was thinking there's kind of 5 areas we've talked about before where that's going to drive demand, right? And if you drive demand, you're going to increase the price because they can't make any more than 21 million Bitcoin. So if you look at the 5 areas, number 1 is retail investors. Can the retail investor demand go up? Well, we kind of solved that last year with the Bitcoin ETF. And looking at the ETFs now, the Bitcoin ETFs, $100 billion have moved into those ETF now, our assets under management in those Bitcoin ETFs. So obviously retail investors are pumping money into there. Institutional investors, so those are the big firms. ETFs help them. They moved into there. Bitcoin, the largest asset manager in the world, is now saying people should allocate 2% of their portfolio to Bitcoin. And just to put in perspective how big a deal that is, BlackRock manages $11.5 trillion. And again, not everyone has done it, but they're saying 2% allocation would be a good amount to put into Bitcoin. And speaking of BlackRock, the BlackRock CEO, Larry Fink, was in Davos with all the rich fat cats. And he gave an interview and he said he had discussions with someone about their sovereign wealth fund, which was a country's wealth fund. And the discussion was, should I put 1%, 2%, or 5% of the wealth fund into Bitcoin? It wasn't, should I put some of our money into Bitcoin? So that would be, as Larry Fink said, if nations start doing this, that the adoption, he goes, it's going to drive Bitcoin to 500, 600, 700,000. And again, we're not Bitcoin experts. We're not telling you to buy it. It's fun to follow. The third area is pension funds. There's a lot of reports. Pension funds are under increasing pressure to put some more or a little more allocation into Bitcoin. Pension funds have been the sort of last holdout, fairly resistant to that change. But there was an interesting bill proposed in Kansas where they proposed the Kansas Public Employees Retirement Funds allocate 10% of their funds to Bitcoin. 10%.
Yeah, it's more.
So again, that hasn't passed yet, but again, you're seeing these things go out. The number 4 area where the drives demand is the corporate balance sheets. And Michael Saylor of MicroStrategy has been huge on this, telling all these companies, listen, you put all this cash is sitting here, you're losing value every year because they're putting more money and you're basically losing 7% devaluation of the dollar. You've got to take some of that cash, put it into Bitcoin, hedge against inflation. So some of the big companies have looked at that. Microsoft had it on their last board meeting, didn't pass. Amazon now has it on their April 2025 board meeting, where one of the proposals is to allocate some of their cash to Bitcoin. Again, not certain that'll pass, but again, these are coming out there. A couple of the smaller companies, have been putting money, some bigger companies too. But the big news this month is Elon Musk, who's the richest person in the world and fairly intelligent. His company, Tesla, or one of his companies, Tesla, announced they put another $1.5 billion into Bitcoin. And they announced that is roughly 10% of their cash reserves. So that strategy of companies looking at their cash reserves saying, why don't we take a portion of that and slide it into Bitcoin? Well, Tesla did that this month. So if other companies start following, that's pretty cool. And then back to those nation states, that's the number 5 one. Our country's going to actually look at Bitcoin strategic reserves. And the big hope is in the U.S. for the Bitcoiners. The big hope is the U.S. does that. Because again, you start talking governments buying Bitcoin. They're not buying 10 Bitcoin here and 20 Bitcoin here. If you remember, I talked last year about Senator Cynthia Lummis in the States. She was the one that actually put a proposed bill forward to say the U.S. should have a strategic Bitcoin reserve and buy 1 million Bitcoins. Think of that. There's only 21 million, and she wants the government to buy 1 million. Well, that didn't get anywhere last year. But she sent a tweet out this month where she said, big things are coming, stay tuned. And the B in big was actually a Bitcoin symbol. So Bitcoin actually shot up just with that tweet. People are going, oh, they're going to announce the strategic reserve. Well, the next morning at 10 a.m., it wasn't the strategic reserve announcement, but they announced that this Cynthia Lummis, pro-Bitcoiner, she was named the chair of the Senate Banking Subcommittee on Digital Assets. And then she released a statement saying, the U.S. should do a strategic Bitcoin reserve, and I look forward to a bipartisan bill later this year. So again, hasn't passed. Don't know if it's going anywhere, but she's now head of this subcommittee, and she's still talking about passing that legislation. So again, we're not experts at Bitcoin. We're not telling you to buy, but it's some fun to watch.
Yeah, it's crazy, and and I do think that a lot of people out there are going in for their annual reviews and saying, you know what, just like the big corporations are saying, how much should I be reallocating and diversifying that portfolio with it? So it's you wouldn't think a few years ago when we were doing this update that Bitcoin would be as big a part of it as it really is, right? And it's huge. So very cool. Very cool stuff. Okay, so heading into some real estate stats for the past month. So real estate in Canada, you know, it's chugging right along. It's doing what it's always been doing. But we've got some stats here. The national home price, the average home price reached $676,000 in December. So that marked a 2.5% increase from December 2023. Home sales, after a 5.8% decline in December compared to November, it did balance out. Like, sales remained 13% above May 2024. So that was that recovery after the Bank of Canada started those interest rate cuts. So we're starting to see it pick back up. One place that we're not seeing it pick back up, though, and this was kind of some big news out of Ontario, is the GTA. So Toronto experienced an 18.7% decrease in home sales in December 2024.
Wow.
Pretty big decrease. Now, that reached a 5-month low for them. Now, despite this, the home price index did see a slight increase of 0.4% month over month. So they're not, losing that appreciation there, but their sales are definitely down. They're not booming as it has been in that area. So something to keep in mind. Now, the Canadian Real Estate Association forecasts an 8.6% increase in home sales for 2025. So we're gradually, with these interest rate cuts happening, there's a lot of pent-up demand that's now coming out to market. So I think we're going to start seeing that increase. And the average home price is projected to rise 4.7% to $722,000. Now, it's a mixed bag across Canada, but like I said, it's chugging along, right? It's kind of doing what it's been doing. Some other trending topics that I found that I just wanted to touch on. One was an update on REITs, so real estate investment trusts. There was an article put out by experts forecasting a very strong 2025 for real estate investment trusts. So they're even saying that there could be potential returns of up to 20%, which we've seen in the past. Now, do your due diligence. Again, just like the Bitcoin, not an expert in REITs, but it is definitely something to look into as a real estate investor if you've got that in your portfolio. I guess in January, a couple of the big key players in the REIT market did announce their distributions, maintaining a lot of confidence in that area. And we're not seeing that a lot in some of the the pre-construction sale, things like that. The REIT seems pretty stable for real estate investors. So something to check out. Another report that I found by PwC Canada and Urban Land Institute identified a few key opportunities for investors in 2025, which I thought was neat. One was generative AI integration. And I'm hearing about this a lot. Real estate investors now using AI to, bring efficiency to some of their tasks. Architectural design, market analysis, like you can throw those stats in and it'll spit it right back out for you, where you might have spent hours on a spreadsheet before. This is happening at your fingertips, which is pretty darn cool. Sustainable practices was another one. So there's a growing emphasis on environmental, social, and governance. So ESG factors in investment decisions. People are looking at that. And then the regional market focus. So we're still seeing a lot of uptick in Alberta, Calgary, Edmonton. They've got a lot of appreciation there, and things are still relatively affordable. So we're obviously seeing them leave the GTA and look outside the box, and we're seeing those more affordable houses kind of get picked up. So pretty neat stuff on the real estate side too.
Very cool. Very cool. Well, speaking of AI, I wanted to talk about AI in my industry news update. So if you look at all the big players in the life insurance industry in Canada, whether it be Canada Life, Sun Life, Manu, Equitable, Control and Compound Financial, okay. Maybe we're not as big as the other
big player.
But all those players are investing heavily in AI. So we're going through our AI audit. So I thought it'd be interesting to see what the insurance companies are doing. And no surprise, the insurance companies are pouring a ton of money into AI, and they've been using it for a fair amount of time now. And the cool thing about insurance companies is they're in it for the long haul, right? They're looking at a 20-year-old saying, we've got 100 years maybe before we need to pay this death claim. How do we spend money to become more efficient? They're not as worried about next quarter and stuff. So there's companies now that are underwriting 40% of their new life insurance applications without a human. So a human's at beginning and end, but AI is basically doing the underwriting now, which is amazing. And then internally, you talk about efficiencies and some of the things we're looking at. Internally, Sun Life said last year there was over 600,000 inquiries internally from their employees. They have an internal chat for their employees that they can say, well, question on this, how does this work? And come back with the answer. So you think of the efficiencies that's going to bring to some of these companies. And I even saw, not on the life insurance side, but on the home and auto side, they're using AI drones to survey damaged buildings or California fire victims, to go over and speed up paying of claims to say, okay, yeah, that house is gone. We got a drone footage of that house being gone. So really cool stuff coming in AI. So I just can't imagine where the world's going to be in 20 years with this AI, let alone where our industry is. So kind of cool there.
Yeah, it's neat that the insurance industry is adopting it as quickly. They're pretty slow on a lot of things.
Yeah, exactly.
So it is nice. They're really slow and steady over there. So it's nice to see that they're working on that. That's awesome.
I think some of their mainframes are still, fueled by coal sometimes when we're trying to get answers in some things, but other ways they're leading edge. So it's a mixed bag.
Yeah, and I might have the conference that I'm going to next week. They're going to have a lot of updates on that kind of stuff, so I'll be able to come back and share that as well to see what's in store. Okay, so moving on to more exciting news with Control and Compound. This was really exciting for us. We launched our live webinar this month. So January was our first live webinar. You were on the call answering questions directly on there. So we had a number of people join us on the live webinar. We had questions asked. We answered those questions live. It was really exciting. I like it, right? Because now we can engage with a lot of our listeners that, you're listening to this right now and you're thinking, hey, I've got a question. Well, you're probably going to want to join us on our live webinar. So we're going to be having these once a month. The next one's coming up in February. We're going to drop a link below. And if you want to click and sign up for that live webinar, you've got your questions, bring them. We're happy to answer them. So I'm super excited about that. Another piece is teaming up with Keyspire. So they've been great to work with. We've got our dates lined up for our webinars and different things that we're going to be doing with Keyspire over this year. So stay tuned for that. If you're a Keyspire member, you're going to see us out there on some webinars and some content that we have coming out for you guys. So yeah, it was a pretty big January. Even that was a big rock for us. I call it, we call them rocks with EOS. That was a huge rock for us getting that live webinar launched and everything going on it. So super pumped for that.
Yeah, it was fun. I'm sure the next one will be easier.
We had some technical
behind the scenes. We had some technology issues and stuff. We did a prep the day before, a 5-minute review that turned into an hour and 15-minute review because some of the technology was a program we hadn't used before. But I think it was seamless when we got to actually in front of the people on the call. But it was pretty cool. Looking forward to doing that every month. So stay tuned for more updates on that. This month, we got some great podcasts coming out this coming month. We've got Calvin Hexter, Edmonton real estate investor, as well as real estate agent, talking about the Edmonton market and what's going on out there and how you can make some money out that way. We got a podcast talking about small businesses and the tax rate. When you go over the $500,000, the changes in the tax rate, how it all works, and we kind of break it down with examples and stuff. I really like that podcast. If you're a business owner, it's a must listen to. We have another one on Beyond Infinite Banking. So we talk about infinite banking all the time, but really, we're experts in cash value life insurance, and there's a lot of other things that we do other than infinite banking with cash value life insurance, and there's other uses, and we talk about some of those other uses in that podcast, which is pretty cool. And then Child Millionaire, we talk about how, for the price of a latte a day, you can guarantee your child's going to be a millionaire using the infinite banking concept. And we actually have an actual example on a kid's policy and how it works and how you can ensure your child's financial future. So another great podcast. So looking forward to that.
We've got some great ones coming up, but if you haven't already, make sure that you check out last month's too. So we had some really good ones come out. Go back and check those out. We had Unlocking U.S. Real Estate with Erwin Zito. That was a cool one that you guys did, talking about real estate in the U.S. We had the debt dilemma for Canadians, and this one had Canadians talking. This was, we've got some comments in there, which is great. We love to see comments and feedback and everything, but it was, I don't know if it was an like awakening or if it was just, people getting upset about the situation, but really good one. Go back and check that out. We also did the Canadian tax changes and implications for 2025. So a lot of people are feeling the limbo of those capital gains changes that were announced, and we dig into that and we say exactly where it is, how that's going to play out, what did change that was proposed, what didn't change that was proposed. We dig into all that, so definitely check that one out. And then we did a podcast on the Bitcoin Standard, which was cool. So the book, The Bitcoin Standard, we did that review, which was really neat. So you're going to want to check that out.
Yeah, I love it. I was really happy with the podcast last month. That household debt one, again, like even just researching it to do the podcast, how much indebted Canadian households are. Because normally we're talking about government, but the households indebtedness compared to other countries, it shocked me.
Astonishing.
And it obviously shocked a lot of listeners and the feedback we're getting. So anyway, that's the February update for Control and Compound. What's going on in the world? Thanks for watching. Thanks for listening. See you next time. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.